Hello and welcome to FS Bro. FS Bro is the region's first podcast focusing on insurance and Insurtech in the UAE and the broader Middle East. I'm Ranjit Philip. I work with a boutique consulting firm. I work on M&A, funding, and go-to-market support for startups and tech companies.
Hi, I'm Vidya, and I'm the founder of Forward, a startup that works with insurance companies to build their go-to-market digital propositions.
In today's episode, we have a very special guest, Anand Singh, Senior Counsel. He specializes in insurance, among other things, at Tamimi, one of the leading law firms in the region. And Anand has worked in various law firms like PSA, Kennedy's, and so on and so forth. And he's been basically involved in the insurance-specific requirements for a long time.
Absolutely. And recently, Tamimi and Anand's team released a UAE regulations roundup document summarizing all the regulations that were released in 2023 and is now applicable to all insurance. So we spoke to him and dug deeper into these regulations to understand the context, the impact of these regulations on the insurers, brokers, and the wider ecosystem. It was a very insightful conversation. I hope you enjoy listening in. Hi, Anand. Welcome to FS Bro. It's great to have you with us today.
Morning, Vidya. Morning, Ranjit. Thank you so much.
Morning.
Thanks a lot for having me here.
Awesome. Anand, we had a look at that 2023 regulations roundup doc that Tamimi had put together by yourself and a team member. It's pretty handy. If you look at some of the regulation, they seem housekeeping rules that should be in place in any case when it comes to risk management, corporate governance, business planning, Ombudsman, and so on and so forth. Can you talk us through some of those regulations that you consider as good hygiene and much needed?
Yeah, thank you. Thank you. Yes, I think that's probably the right word. It's more of a housekeeping than anything else. But I think these things really depend on where the market is, how evolved the market is, right? So in an evolved market where it's all developed and the data environment is much more sophisticated, something like this is probably not required or may have come 20 years before. But here, the way things are, even with this coming in, what I can tell you right now is, I would say around at least 60% of the market is not compliant with these. Also, these are very basic matters. The corporate governance, whether it's corporate governance requirements, whether it's the risk management requirements. The risk management requirements, I think, are great tool because they now go into the detail of specifying what is the exact requirement. So far what we had was very broad and a lot of impetus was given on the prudence of the board and the stakeholders to do the right thing. But clearly that was not working out. So they've gone ahead and set it out that, look, this is what we expect you to do. And if you're not doing these, this is the repercussion of it. So I think it's a good initiative by the authority. Now, of course, the implementation is the next stage and we'll see how that comes along.
So you're saying up to 60% may not be covered by fully compliant with these regulations. And some of these are, to be fair, draft and proposed regulations.
Yeah, absolutely. So it's not about pointing fingers at anyone. It's just that we're suggesting that the nature of the market is just that the way they are, do not consider this to be the most important factor. And therefore, it's not that they're purposefully in breach or something, or they're not trying to not be compliant. They just do not believe that they require that kind of attention.
Yeah.
And what the regulation does is it brings it up on the priority list. So I think it's a great change. And this is
a good
more broken, it's not broken, it is more regulation driven and regulator driven market in that sense at the moment.
Yeah. It's a required set of changes. And you've been here in the region for a while. You've been involved with regulatory consultations with the IEA before and now the UAE Central Bank. One of the upcoming regulations that we hear in the pipeline is open finance. And this you have covered in your brief.
Yes.
Early days yet, because I think there's some time for it to be put into force. But what do you see are the potential impacts on the insurance sector?
Yeah. I think open finance is a very noble initiative. And I think what's noble about it is the fact that it's been tested in only 2 countries in the world so far. There's a lot of hidden trial there. That's the thing. But as an initiative, what they're trying to do and what this will do to the market, I think it'll bring an immense change. Why I say that is basically they're trying to create a centralized system where every bank and insurer and eventually all the brokers and other licensed players must subscribe to. So it's not an optional position. Right. And what that then if we go back from there, what it does is that all the insurers and banks, their infrastructure and system must be up to date and up to the standard that they are able to integrate with the centralized platform. Right. So this brings about the digitalization and the whole revolution that we've been talking about for many years. Again, that's been optional. People may do it, may not do it. They may do it at their own pace. They may not like the way it's being done. So it's a lot of factors to it. But when they have to participate in a system, and there is a minimum requirement that yes, to be able to subscribe, to be able to issue these APIs and to respond to these APIs, all your systems need to be integrated. And this is the minimum benchmarking for that. Then it just brings about this revolution in the market. So the digital can come about. And I think UAE is perfect for this because it's a smaller country. There's a lot of focus on digital. Things are connected to your Emirates ID as is. So if you then start bringing a centralized system and then you have one gateway into it through your, let's say, your Emirates ID, it just makes everything very seamless.
And APIs, for folks who are listening don't know, is applications programmers interface. And this is basically a way to connect into the core insurance systems of the insurers. And I presume Open Finance has a phased approach, probably open banking first and then open insurance. I don't know if you are able to shed some light.
It's still early days, but I believe the way they want to see it is they want it to be open finance rather than open banking and open insurance. So They want it to work together with the whole sector. At a go, it will be phase wise in the way it's done. So it will first be limited to the top insurers, banks, and then it will eventually get down to the other players in the market. So still, I would say there's still a fair amount of time before we get to a final implementation phase.
Okay.
But then I think it's something that people need to be aware of and they really need to see what's the best they can make out of it.
So a couple of things that have happened in other regions where open banking has come, Europe and UK, is that the financial inclusivity has gone up, and we have seen a number of fintechs and insurtechs come up which use that data to provide services cheaper to the customers, right? So we hope some of these changes will come here as well.
Yeah, and I think why from a GDP perspective and even written premium perspective and things like that, I think is at a good pace given the population and given where we are. But in terms of insurance penetration, I think apart from the mandatory insurances, which is your motor and health, people do not still have the basic awareness of insurance. And I think these kind of initiatives will bring about that change where you come up with new products, small bite-sized products, start giving people the opportunity to cover smaller incidents, bring up new top-ups, right? So something which is very basic and that's lacking is a dental plan. So a lot of us are covered by our employers, but those plans do not have dental cover. On the dental side, what we were very worried is that while as a country, UAE is probably at 90-95% in terms of every person being insured on the medical side, most of these plans do not cover dental. But what the market doesn't have is an opportunity for somebody to go and just buy a pure dental plan. Whereas in other markets, developed markets, underdeveloped markets, all these places, there are these top-up options. There are top-ups you can take for this. There are top-ups you can take for multiple things. And a lot of other bite-sized products which you can avail. And I think it's more than what it can bring in terms of premium revenue. It's more the awareness. What it does is brings about an awareness that yes, insurance is not limited to motor insurance or health insurance. There's much more that insurance can do.
Absolutely. And looking at it from an insurer perspective, I think the readiness has to start from right away because this is already in conversation and we know how insurers tend to pace up the whole of the show. And with it opens up a huge Pandora box in terms of readiness itself. So a lot more required in terms of building that awareness itself.
Yeah, there's a big move. It's because the digital transformation for a lot of insurance is still about, let's move everything into laptops. So we're talking much more ahead of all of this, and the regulators thinking about it, which is brilliant.
Yeah, absolutely. And talking about the highly regulated product is health and medical insurance, and for obvious reasons, because insurers have access to amazing amount of customers, private data, and into DHA, the Department of Health, Abu Dhabi, even the central bank has come up with few regulations specific to medical insurance. what is the context to these regulations? Why are we seeing this huge stress on insurers' ownership on the customer data and also building a very robust cybersecurity measures? What's the context?
Yeah, so it's part of a bigger sort of push towards obviously the data security, right? So there is the Personal Data Protection Law, PDPL, that has also come about, which applies generally to every data. Now, there was a law on health data that came about a few years back. So health data was always anyway the priority because of the sensitivity of it. And now they have come up with these new requirements and standards which are after the PDPL. So it's just a gradual step because they first came up with the health data law, then the general personal data protection law came about, and now they have come up with more detailed requirements following the personal data protection. So that's the reason why it is here. And of course, it comes down to the sensitivity of the data. And the other issue is that the way the markets are structured, right? So which we've seen historically, a lot of the TPAs here, they are the ones sitting on the data. Whereas the role of the TPA should be limited to just as an administration service provider, but they act as if it's their members, they act as if it's their products, and they act as if it's their data. So there's a big push from the regulators to get away from that and let insurers take the onus of the products, the data, the members, everything. Because there have also been instances where some of these TPAs have left the market unannounced, and that has led boil down to the customer getting impacted straight away. So that's something we don't want to happen again. So they're learning as we go along. Of course, I think it's a good move. It's a great move.
Yeah. And I think obviously from the second part of the question on cybersecurity, you can see a number of these cases where people have lost X 100,000 dirhams because of some phishing scheme, a phishing scheme. I suppose the UAE Central Bank is taking cognizance of this and probably trying to even encourage insurers to come up with products as a backstop for this, right?
There is, yes. That discussion's been happening at a B2B level for a while now. And I think what it needs to happen is also at the B2C level. But B2C level, to build that awareness takes a lot of time, a lot of cost. So unless any of the big insurers really come up and they want to start that, I think that'll be difficult. But I think at least at the B2B level where customers can get these products from their banks, from their insurers, at that level, I think that should happen. That's already happening.
Yeah.
We're also involved in some of these discussions. We know that it is happening. So it is required. So the market right now, it's because that risk is very high.
Absolutely. Now, just going towards the sort of the overall insurance law itself, one of the key things that stands out is the capital requirements. So now we have been talking about IFRS, capital requirements, all this causing consolidation changes, stuff like that. But what do you see from your vantage point in terms of the market dynamics shaping up as a result of this?
I wouldn't say that this will lead to things changing straight away, that the law is not going to have that kind of impact, unfortunately. It should, but it will not. But that's the reality of it. But I think where we are heading to and what is the problem here is that they've not been issuing new licenses for some time now. Now that leads to any new player that wants to come in, they don't have a proper legal way to get in.
Yeah.
They would then go and enter into a fronting kind of a relationship and they would be there sitting at the back, which is not a happy place for them. They want their brand to come out, right? So it's not good for them. It's not good for the fronter as well because fine, they're getting that 5% or whatever they're making on it.
Yeah.
But ultimately they are on the risk for the whole amount. So if things go wrong, it is on their books. So it's not a good position in that sense. And that's, I think, something the regulator needs to take cognizance of, the fact that this is all linked to one another. It's not that you can just independently say, fine, I'm not issuing new licenses. People need to consolidate. Either you force that consolidation to happen, or you allow people who have good legible business plans to come in and allow them to take those licenses. Then there can be a proper cleanup in the market. What they've done right now in this new insurance law, they've said that, okay, for branches as well, the capital requirement need to put in 100 million capital guarantee. That requirement initially was only for subsidiaries. Now, branches generally do not have capital requirement. That's the whole idea. You run on the capital of your parent.
Yeah.
Now you start requesting a branch to have a capital. You already have a requirement for them to have local committees, local board, let's just call it, and all the risk management, everything has to be done locally. And then you're thinking, why should it be a branch? It is as good as a local subsidiary.
Correct.
But from a risk perspective, the risk is still on me.
Yeah.
Right. So as a parent, so it's not a good place for those branches who've been here many years and now suddenly they will have to comply with these requirements. I don't think it's a good move in that sense. But I think it will bring certain changes. I think it'll let people rethink their strategy for the branches at least. And for the others who want to come in as well, I think they'll have to think about it. The other thing, what we're hoping it will do is after the new law is really properly into place, they will allow for your licenses to open again, right?
Okay.
You want people to put in that 100 million, okay, at least allow the new licenses to come in.
Got it.
So I think if that happens, then it starts changing things.
Yeah. Okay, so that's great. So at least you'll see some new capital coming into the sector and all that, some innovation, some change.
Absolutely. Look, if you compare this to where Saudi is headed, right? Saudi's, the sector is growing year on year at a massive pace, and they expect insurance to be a big contribution to their GDP, which is they're a much bigger economy, and if they are expecting insurance to contribute to their GDP in a good way, there's no reason why it cannot happen so in UAE, which is a much bigger hub for business. So I think that yes, there has to be a bigger focus on this, and which that's what's lacking. And there are discussions happening, and hopefully that discussion that will bring some changes. We're involved in some of these discussions, so can't say more than that. But yes, hopefully things look brighter in the coming years.
Wonderful. One of the most important regulations, I think, that came out in 2020 was this whole reversal of this 50% discount on the minimum premium for motor insurance, right? It was bleeding the market. It was just going backwards. Now, this original, obviously, regulation came at the back of COVID because people were not using their cars and whatnot. But then it just continued and it was exploited by the market, really bringing down the sustainability of the motor portfolio. Now, this was passed sometime mid of the year last year. Are you seeing impact of this regulation already so far on the market? And I know the profitability of...
Yeah, I think the profitability is going up. What I understand is people have stopped giving these discounts. And I think it's a learning for the market. And that's probably the biggest takeaway from this that insurers need to take out from it, that while the regulations said that you could offer up to 50%, that didn't mean that you had to offer 50%.
Yeah.
And rather than everybody taking out from the same pie and cutting each other's profits, we look at the current market, everybody's writing at the standard rates, everybody is making money. That's how it has to be. The regulator need not intervene in these matters, because that's what the players also don't want, right? In the regulator getting into this very small nitty-gritties, because these are more commercial aspects. It depends on your underwriting. What the rate should be should depend on your underwriting, loss ratios and everything. And nobody likes that very basic level. Okay, no, you should only offer this or not offer this. So if the market is cognizant enough of this, and if they are ready to do the right thing, I think the regulator will take a backseat and they'll let them do it. But the problem is that they don't do that.
Yeah.
So I think that's the biggest learning that the market needs to take from this. One small move and they're back into green. So that's probably what they need to do going forward.
Yeah. There has to be some sort of self-regulation by the participants. Otherwise, the regulator will come down heavily.
Yeah. And that brings into sort of question, or not really question, that the relevance of these associations, right? There are quite a few associations in the market. That's where they need to come in and help the market, because the idea is to let the market grow. It's not really to regulate and over-regulate and bring it down.
So now you've seen those new regulations, you've seen the old regulations which are there, and I'm sure many companies come to you in their early stage, especially Insurtechs and stuff. Where should they set up? This is one of the perennial questions that I also get faced by startups that I advise from the Insurtech side. Is it free zone or mainland? I don't want you to give me a definite answer because it'll be different for different business models. But what should be the consideration or the decision-making process that these guys should follow?
Broadly, I think I think it's very simple, and probably that's because of the way where I sit. I think it's as simple as, is it a B2B or is it a B2C? If you're a B2B, you're fine to be in a free zone or any of these centers. But if you're B2C, if you want to create a brand, I think onshore is the way to go. And onshore as well, it's moved away from what it was many years back. So onshore now allows you to set up a 100% owned entity for most of the activities in not pure insurance, but that's not what these insurtechs do anyway. The more technology and support services, most of those would be allowed without any local sponsor requirement. None of those. It's very easy to set up. You can set up an entity within, I would say, a week. You can have an onshore entity set up. The renewal can happen in a day. In some, I would say now 70 to 80% of the times I see that DED and onshore have become more efficient than a lot of the free zones.
Yeah.
They're much faster, and pricing wise also they're pretty competitive. So I never discourage people from going onshore. I think it's if you want to build a brand, if you want to build a business out of it, if you want to be in the brand, then D or onshore is the way to go. It's more support function, B2B. You're probably looking at supporting other geographies as well. It's more solution. It's a SaaS, things like that. Then yes, fine. You're okay to be in a free zone. There's just something to mention is that the new insurance law, what it has done is it has identified now that a broker or insurance service can only be provided either onshore or from financial free zones. Okay, so that's something which is there between the lines somewhere. People have not really put that much focus on it yet. But what that means is you cannot be set up as an insurance broker or insurance service provider kind of license if you're not in ADIFC or ADGM or onshore. All the other free zones going away from this picture.
Got it. That's very good. That's a good guide to look at B2C versus B2B, and are you building a brand or not, so on and so forth.
Yeah, no, absolutely. And staying on that post itself, so like you said, if it's a B2B, it's very easy to integrate from a license perspective. You can take a free zone or you can take a mainland license, but also into the incumbent insurers ecosystem itself, because they're providing a SaaS, they're providing an ancillary services and whatnot. There is a way of getting in legally because you have a subcontracted agreement, standard agreement that is in place. But if you want to be a brand, mainland license is great. But what is the way to become that B2C brand? How do you have that route? So is that only agency route, or you can have a fronter, but then you need to have an RI back? What is the way for a B2C brand to...
Now we're getting into free legal advice session. Yeah. No, well, I think, look, it's back to the model. It really depends on what you are trying to build. Agency model is a bit of a no-go for a lot of things here, because insurance agency per se is regulated, has to be licensed, has to have certain local Emirati, fulfill those requirements, things like that, right? So I wouldn't put those words insurance agency as such, but it really, again, is back to what you are really trying to build. Of course, keeping in mind that it's a highly regulated sector, whatever is customer facing has to be coming from a licensed entity, be it calls going to the customer, be it codes, be it insurance requirements. Just because somebody else is doing it in the market doesn't make it right. That cannot be the logic to do a business that, okay, 4 other players are doing it, so why not I should also do it? It wouldn't help, because in the long run, you will get into some kind of problem and you'll have to go back to the drawing board and change things. So rather get it right from the beginning. But yes, it really depends on the product. Ultimately, that back to your question, I know I didn't really answer that question, but it really depends on the product and service that you're offering. It's difficult to put it in a box as to say that this model works or that doesn't, because there are a lot of touch points. If you look into health insurance, there's a host of DHA regulations that you need to think about. There is the central bank that you need to think about. There is even a Ministry of Health that you have to look at from advertising perspective. So it's a lot of factors. It's difficult to really say that this works or this doesn't work.
Yeah. Wow. Okay. Now, again, going through the sort of roundup and the sort of regulations, there seems to be a focus on policyholder and protecting the policyholder, as every insurance regulator should. So if you could pick out a few of those points that are, I think, beneficial from your point of view, it'll be good to discuss that.
So I think the best one is going to be the Ombudsman regulation. That I think it will be a game changer. Because the current model, which is Insurance Disputes Resolution Committee that they have at the moment, it's not really as efficient as it should be. Let's just say it was supposed to do a lot of things and it's not really gotten there. So I think Ombudsman will really help in terms of customer protection. The other things are obviously with let's say something like open finance coming in, it just brings in a lot of transparency, right? So if you think about it from a product distribution perspective, you can cut down on mis-selling to a large extent. If there's a life insurance that is to be bought, and that, let's say it happens through the banking channel, but ultimately goes into the insurance API, brings back those things. It is the customer who is making those declarations, unlike an agent making those declarations. Whether you're a smoker, not a smoker, all those things, an agent will always feel something to get the business, to make sure the business comes in and the customer pays the least amount of premium, because he's got no bearing on the claim side, right? It doesn't matter whether the customer gets the claim or not. Whereas as a customer, if I'm making a declaration, I'm aware that, look, a wrong declaration here means that potentially I'll not get my claim. So I'll end up paying premium for 25 years, but I'll still not get the claim. So I'm unlikely I'll be doing a wrong declaration there. So I think that those kind of things will really change the way this market functions at the moment. And again, it brings about the penetration into the market with these products, because it will increase the awareness, it'll bring in the license that they're talking about. Is that the capital requirement, the threshold is less for open finance, right? It will bring in new players into the market who are right now staying outside the foray because either they don't want to have local sponsors on the license one, or they don't want to be putting in 3 million, blocking in that capital. This changes all that. So maybe that will impact the market in a very good way.
Are you able to share the license requirement there, or is it draft? And
it's still a draft, but I think the draft was circulated to the market. It's not really a secret as such, but it's because it's still in draft form. I think it's better that we wait for the final version to come about.
Okay. But with all this emphasis on governance and risk management and focus on policyholder protection and requirements like that, what do you see are the challenges for insurers and brokers in aligning with these enhanced expectations?
I think what it does is directly it impacts their profitability, right? Because the cost of doing business goes up. But then we have to step back and see it increases the cost of doing business right now, but does it impact in the long run? Yes, definitely. It will have a much better long-term impact. But in a short term, there will be struggle. And given how closely the boards are structured here, right? The shareholders and the boards in this part of the world, they're one and the other, right? They'll not like these things, because this means that when profitability goes on, there's more pressure on everybody that, okay, let's see why and let's go get back to drawing board.
Yeah.
But from a long-term perspective, this is what the market needs. If you look around at the biggest funds and biggest books of countries, look at Canada, the sovereign fund is the pension fund. They look at all these bigger geographies. So that's what it is. So if a long-term investment does that to you, that you are able to create a big team. Right now, we are all aware of the policies that are written in this part of the world, right? The investment policies are all taken that happily or unhappily. But it's all going into outside the country, right? Foreign pockets. So there's no visibility on it. And believe it or not, we're all from insurance sector, but we would have still taken it, but there is no protection, right? So if tomorrow something goes wrong in that, where are you going to go? Who are you going to complain to? The Isle of Man? I don't know. Even I can't even point out where that is on the map. So who's going to protect me if something goes wrong? So that awareness needs to come in, and it will come in. And I think that is how you develop a big sector, a big practice, which is long-term and sustainable.
yeah, for sure. And it also improves the depth of the capital markets as a result when the investment stays in the markets.
And I think, so one focus right now, if you look about, is on life, is on motor, general, these kind of lines. Whereas I think the life is still quite the neglected segment.
Yeah.
But that needs to change, because that is what is a long term, right? That's where you bring in long term money. That's where you bring in investment. That's where you build a book.
Yeah.
And I think the regulator is looking to shift their focus on that as well, and see how to grow that, because that I think will definitely change the functionality of this market.
Yeah.
And to move on from just surviving, which is what most of the insurers are doing, thriving.
Exactly.
As we come towards the last question in the main section, let's talk a little bit of comparative legal frameworks from your knowledge of other legal frameworks, geographies. What would be the wish list that could catalyze the growth of the insurance ecosystem wishlist to the regulators?
Yeah, to me. Ideally, I want to put on all the caveats before I answer that, but I'll still go ahead and answer it. But see, there are a few issues that the market has. One is the premium collection itself. So I think a market like this needs something like advanced premium collection, like what a lot of other economies have. Your risk does not commence unless the premium comes in. That solves a lot of issue. That right now, because the problem is you've got these big groups having these big policies with these insurers. And because of the size of these groups, the insurers are not even able to push them to pay them. Forget like on day one, even in 6 months down the line, they don't want to push them. So ultimately there are times, and we've heard this on many occasions when they're told that take my premium out of the claim that you're going to pay me.
Yeah.
So that's just wrong.
Yeah.
That is, it hurts the market. It straight away attacks into the basics of insurance, right?
Yeah.
Whereas the idea is underwriting. You've looked at a certain book. You've decided these are the risks. You expect this money to come in. Of that money, you also expect to do some investment income and other incomes and, deploy that money somewhere. Now, if you don't, as a reinsurer, you've not received that premium at all. And 6 months down the line, you're told by this insurer sitting in this part of the world that, look, I know we haven't paid you the reinsurance premium, but we now have 110% worth of claims and you will pay it. You pay it that year. I'll pay it probably the year 2 as well, but I'll stop at some point. So that's a big problem. And I think that there were some studies a few years back, and if you look at it, I can't remember who did those studies, maybe Moody's or somebody, that the amount of money that is in the market for insurers, the collection money, if you look at that itself was good enough at that point of time to bring 8 or 9 of the insurers on the solvency track. Just if they were able to collect the money that they're owed, they will be solvent.
Yeah. So, it's amazing how it strikes at the heart of even contract law, offer acceptance and consideration.
Yeah, that's one very basic issue, and which they've not addressed so far, and I think they ought to do that. That's something very important. The other is life insurance. Then there are other issues as well, where, people who are not licensed. On the one hand, you have all these different thresholds and requirements for people who are in this market, that you've got to do this, you're increasing the governance standards, you're increasing this. But on the other hand, there are all these different people who are coming, flying in and flying out and doing insurance in this market.
Yeah.
How's that fair on the people who are here?
Yeah.
That's my only point. For me, honestly, these guys are also a client, and the local insurers are also a client. So I'm not complaining from my perspective as to why they're not in. My point is that it's not fair that on one hand you have these very heavy requirements on capital, fit and proprietary standards, everything.
Yeah.
But on the other hand, you're letting people come in and drain the premium out of this market.
Yeah, that's very good. I think that kind of brings us in a nice way to the rapid fire section, where we ask our guests for answers in 60 seconds or less. So if you're ready, we will fire a few your way. I'll start off and then Vidya will take the rest.
Expect you.
All right. Okay. So number 1 is an easy one. Biggest lesson learned in your legal career?
I think the biggest lesson, and that what makes this career very interesting, is that you never stop learning. Yeah. Because of the way you asked me open finance question 6 months back, I was blank. Ask me right now, I probably know at least 20% of it, right? So I think that's the best part of this.
Yeah, constant learning. And what would be your favorite city for travel?
I would say Cape Town.
Cape Town. Okay.
For the rest of both worlds. Yes.
All right. So what book, blog post, or podcast, or YouTube documentary do you recommend the most?
I read a lot. I consume a lot of content on different things, different matters, but I don't have a favorite.
I was thinking you would say FS Brew, but that's fine. It's like, all right.
Don't want to sound biased, guys.
No, and what would be among the last few months that you've seen? What would be the most exciting tech or regulatory innovation that you've seen in insurance?
Sure. So I think globally, a lot more is happening in a very different way. But I think in this part of the world right now, I think the regulations are evolving just at a very basic level. It's difficult to point at anything in specific again. But I would say open finance for UAE would be definitely very interesting, yes.
Yeah. That does sound game changing. Yeah, absolutely.
Yeah.
Who's his most inspiring entrepreneur, business leader for you?
So I've been following this guy from very many years, and I think now I've been watching Shark Tank as well, the Oyo founder.
Okay.
Young chap, and the way for him, I think everything seems very black and white, and I love that.
Very legal. What's your preferred work mode? Is it for work from home or work from office?
I would prefer to be in the office most days. Yes, yeah, like the interaction.
Nice, absolutely. What's like the biggest or the top priority for the insurance vertical here for you at Tamimi?
It's okay, nothing specific because it's a regional firm, and we got to grow the whole practice all across. So there's nothing specific which is just for this, but I think doing very well on the claim side right now. So on the insurance claim side, that's growing, and I think that will continue to grow as we go along these years.
Wonderful. This brings us to the end of the podcast. Anand, thank you so much for sharing all that insights. It was super helpful. I'm sure our listeners are going to benefit from it. Thank you so much.
Yeah, thanks a lot. And I really enjoyed the conversation. And yeah, it's definitely more a conversation than anything else. So
absolutely.
Not to be taken as legal advice.
No, absolutely. Yeah, thank you, Anand, for being here. It was fantastic to have you.
Thank you. Thanks a lot. Thanks a lot, guys.